Hi friends, welcome to A to Z Learning channel. Today in our video, we'll talk about the most important lesson that we all must learn if we want to make money in the share market. Yeah, I repeat, the important one lesson that we all need to learn, practice, and be disciplined about it so that we stand chance to make money in the share market. In absence of this lesson, in absence of practicing this particular discipline, our chances of making money are absolutely non-existent in the market. So it's a very, very important video. So please stay with us until the end so that you get to know all the practical tips of implementing this important lesson in your portfolio construction, in your interaction with the share market. The way we have kind of structured today's video is basically there are two parts. In the first part, we'll talk about the market cycles, like markets go up and down, and we talk about the normal behavior in which people behave and what is the outcome of that normal behavior that people experience. In the second part of this video, we'll talk about the most important lesson that we all need to practice and be disciplined about it so that you stand chance to make profit in the market and not lose money in the market. So it's going to be important video. So please give us your undivided attention and stay with us until the end of the video. And if you've not subscribed our channel A to Z Learning, I would urge each one of you to please subscribe so that you get information about our new videos, our historical videos immediately. So without any further delay, let's start our video. As I said, the first part will talk about market cycle and the normal behavior in which people behave in the market. So first of all, market cycle. Markets don't follow a straight line. That's very obvious. If they were following a straight line, it would have been very easy. Everything will be certain. Everything will be guaranteed. But markets go up and down every day. Markets go up and down every month, every week. In fact, every 1 hour, they go up and down. They never move in a single line. So this cycle of market going up and down is called market volatility, and market volatility is very important for the market. While it goes up and down and creates uncertainty for every investor, it also generates opportunity for people to enter into the market or exit from the market, or enter into a particular stock or exit from a particular stock. So it's a very important aspect of the market. The volatility is good. Volatility is important because that's the only way you get the opportunity to make money in the market. So that's very important to keep in mind. So when market volatility happens, what happens? Basically, market goes up and then they go down and then they go up. So when the markets are going up, there's a lot of optimism. Everybody thinks that, oh, things are looking better, companies are making a lot more profits, country is growing. Every newspaper, every news channel, every magazine that you read, the social interaction that we kind of go into and talk to our friends and family, everybody's looking at the positives in the market, positives in the economy, positives in the companies. So there's a lot more optimism, and you see everyone around you making money. They invest a certain amount that becomes much bigger in matter of days, matter of months. So there's a lot of optimism, and when a lot of optimism happens when markets are going up, people feel that they are missing out something. If they are not in the market active, then they feel that they are missing out all that upside that their friends, their family members, the famous commentators who come on the news channels are making. So there is a fear of missing out, which is referred as FOMO, start to emerge. The greed start to emerge. People feel that, oh gosh, I should not keep the money in the bank account. They basically want to take risk and they want to put that money in the market in anticipation that the money will grow quite fast and quite significantly. People at that time feel that everything is absolutely hunky dory, everything is rosy. People feel that whatever they touch, it turns gold, it becomes, it offers really, really good return. So a lot of people get attracted. And that normal behavior in those sort of scenario is that people put more money. It attracts more people to come into the market. And when more people are buying the stocks in the market, what happens? Stock prices start to go up. People are entering every day, new people are coming in the market, prices are going higher, and prices are going higher. So people who are entering at that time when markets are all time high, the greed is there, a lot of optimism there, people are paying higher price to enter into the market. Similarly, when you look at the other side of the coin, so let's assume that markets are falling. What happens markets when markets fall? There's a lot of nervousness. There's a lot of doom and gloom around you. There's a fear factor. Panic start to emerge. People look at only the problems in the economy. People only look at the things that are not working for the country or company or industry, depending on whatever is going on. So you look at whatever is happening in the world around us, we always look at the negative side of that. So people start to feel that as if like sky is fall, there's absolutely no tomorrow, sky is going to fall tomorrow. So there is panic, people get frustrated. So what people do in those sort of thing, the normal behavior in those sort of circumstances is that they start to sell whatever they have in the market. They feel that, gosh, if I don't sell it today, tomorrow I will get a lot less than what I'm getting today. So they get frustrated, they start selling. When they start selling, then there are more sellers in the market, the stock prices start to fall. Stock prices start to go lower and lower every 1 hour, every week, every month. So that's the other scenario. And when prices are going down and you're selling, you means basically you're realizing less than what you could have done for the stocks that you were holding. So what happens when you buy? When you're someone who's entering in the market, when there's a lot of optimism, prices are high, you buy at a higher price, and and when you kind of sell at the lower price, what is going to happen? I think one thing for sure to happen is that when you buy at a higher price but sell at a lower price, your losses are absolutely guaranteed. You can't escape incurring huge losses on those transactions. So that's how people normally behave. So, like I'm showing on the chart on your screen, that when markets are going up, greed start to tickle in. A lot of people are buying and they're paying the higher price because market is already up. When markets start to go down, as you see in this chart, when you see markets are starting to go down, there's a lot of fear, panic start to come. So what people do, normal behavior is they start to sell and consolidate their losses. And as you repeat this through the cycle, the only one thing is guaranteed is that you will run out of money. Whatever is your saving, whatever is your investment, if you continue to buy at higher price and sell at a lower price, you'll start to make losses, and those losses will eat all your savings, all your investment, and there will come a point when you will be broke, you will be bankrupt, you'll have absolutely no money left. So in this sort of normal behavior through the market cycles of up and down, if you behave, only one thing is guaranteed, that is loss. And that's the normal behavior which is an issue. I'm not saying that everyone behaves like that, but most people behave like that. That's the reason share markets, people think that it's not the place uh, for people to make money. People go in and then come out when the prices are lower, and therefore they make losses, and then they don't want to go back again until markets start to go up. So that's the normal behavior which we must kind of first take a note of, and then the most important lesson, how we must avoid it. Because clearly, this normal behavior in which most people behave, losses are guaranteed. And we don't want to be entering into the share market with a view to make losses. We want to enter into the market with a view to make money. So, what is that most important lesson? So, first of all, let's take stock. Market volatility is permanent. So market volatility is not going to go up. If you expect that you'll be able to guess and project that the market next day is going to be at this level and tomorrow is going to be there and day after is going to be at a certain level, so that you can make a very informed choice, that's not going to happen. The prediction of the market is absolutely a loser's game. You have to play the game when you are willing to accept that market volatility is here to stay for good. So that's very important. It's permanent. So it is important to be different. We don't need to behave in the normal way, but you need to behave in the different way. So this cycle of optimism and nervousness we have talked about in the previous slide. So let's say, so what is that different behavior? I think the one line that describe is basically be contrarian under greed and fear environments. So greed happens when stock markets are rising. Fear happens when stock market are going down. And in the greed, normal behavior is to buy. In the fear, normal behavior is to sell. And you need to be contrarian. So most important thing is be contrarian. Means if everybody is going right, you think about looking at going straight or left. Be contrarian, be different. When everybody is going straight or left, you think about being contrarian to explore the option of going right. So that's the way for you to kind of stand chance to make money in the market. So it's very, very important that when everyone is greedy, you be fearful. You behave like everybody is fearful and you are fearful, so that you are not taking the decision that a normal behavior is taking. When everyone is fearful, then you be greedy. Then you look for opportunity. When everybody is fearful, everybody is selling the stock, you look for opportunity. You become greedy that, okay, what can I buy today? What can I pick up today at a cheaper price? So you become greedy. So that's very important. So it's slightly different. I would say it's a contrarian behavior that you need to bring in your day-to-day life when you are dealing in the share market. Hope it's making sense. So let's say, so buy when more people are selling and prices are lower. So what happens when people are in fear? They are selling, more people are selling, and they are pushing the prices down. If you become the buyer, you will buy at a lower price. Let's think about a scenario when most people are buying because they have optimism, they think nothing can go wrong, and prices are going higher, and most people are buying at that time. What you need to do as a contrarian? You need to sell so that you are selling at a higher price. So I repeat, when prices are going down, when most people are selling, you buy. When most people are buying, you sell. So that's the contrarian behavior that you need to bring, and that's very, very important. And what happens when you are selling at a higher price and buying at a lower price? You're going to make money. Your profits are guaranteed. And that's the most important lesson you need to have. I know it won't come naturally. There will be occasion when you'll feel, gosh, that's intuitively doesn't feel right. When everybody's selling, sky is going to fall, everything is doom and gloom. Any newspaper you read, any news channel you watch, everybody is saying that as a and they are setting the targets as if like today something is selling at 100, tomorrow they are expecting it to sell at 60, 50, all those sort of things. And it becomes quite counterintuitive to have the courage to buy at that time. But that's the most important lesson you need to have. That's the most important contrarian behavior you need to bring in your portfolio construction. Only then profits are guaranteed. You must have heard about Warren Buffett. He's the most successful investor in the world. He puts it very nicely. He says, and I quote, "We simply attempt to be fearful when others are greedy, and to be greedy only when others are fearful." So he is the contrarian example, a great example of a contrarian investor in the market. And rest you know, he's the most successful. He has made the most money in the market worldwide. So, and he has followed the principle of being contrarian, being different. So, my friend, this is the most important lesson that I wanted to share with you, so that you learn this and you practice this and be ruthless and disciplined, that even if it feels counterintuitive, even if it feels not the right thing in a moment, just stay committed to it, stay disciplined with this, stay ruthless with this, and then your profits will be guaranteed. So I hope this has been helpful, and my explanation, my sharing of this important lesson has been done in a very simple manner. I look forward to your comments. If you like it, then give us lots of likes on this video. If you have any suggestions, any comments to offer on this video, then also please kind of give us comment so that we take note of what has worked in this video and what you would like to kind of see it differently. And if you've not subscribed, to repeat, basically, if you've not subscribed our channel A to Z Learning, then my request is to please subscribe, put the notification also on so that every time we publish our new video, you get the notification immediately and you become part of our viewer community and give your suggestion in terms of what topics you would like us to focus on, what topic you would like us to kind of make videos on, and also suggestion in terms of things that need to be different in our video, and also compliments if you feel some of these things are making sense and we should stay committed to the same style, same way of presenting, then also we would really appreciate listening to your comment, because that's the kind of motivation, that's the encouragement we need to kind of keep going with our mission to simplify the world of complex world of finance and savings and investment. So good luck with your investment, make lots of money, and thank you so much for watching our video.